Hello traders, this is another video about DAX, and in this video I will cover the day trading opportunities that we had for Friday, November the 16th, and also I will go through the large time frames starting from 4 hours, and then I will go to daily chart on DAX index and on DAX futures and discuss about some ideas and some possible formations on those charts. This in front of us is the updated chart that I have posted in the morning on Friday, and in my prep I said that in pre-market price is falling from this 440 455 zone, and how price will react to it could be some clues. And then also I expect bulls to be active on the zones below, and that the line in the sand is 250 for 270 as yesterday low. Line in sand for what? I talked and made a small video about this possibility here. It was first on Thursday a false breakdown below the 300 level, and then I said that this is the first time that the market really have a chance to make a first higher low and after that a higher high. That chance is still a possibility, but I really didn't expect this retest here again. But as I said, line in sand was 250 to 270, and the price really didn't go much below that. Now we will go to the small time frames and see what kind of opportunities we had on Friday. Now I draw these boxes on the zones to be more visible, because when I watch my videos I think that these lines are really thin, and for us maybe it's good to emphasize this these zones, edges of the zones with these boxes. So okay, pre-market in pre-market price was falling from this first zone, and there was our first a trading opportunity, and I covered them, a few of them in real time, the ones that I have traded, and this here was the first opportunity for us to short this market, and the first target was to the pre-market lows, and second to the cash close, because I was expecting that this from Thursday was a false breakdown, and that then the bulls will have a chance to be active like this on a halfback of this move, and from here they will from here push the market upside, but that didn't happen really. So this was the first opportunity with closing your trade like here on the pre-market low, because here is market is open, and this first hour of futures trading that starts to trade at 8 a.m. from 8 to 9 is the pre-market, and this was the pre-market low. And observe how this pre-market low later in the after hour and in the afternoon contained the price, and then price was just hitting the pre-market low and couldn't go above. So these levels, pre-market low and pre-market high, sometimes can be really important. So that was our first opportunity for short. Then there was another opportunity here, which I also demonstrated in real time on Twitter, and this was here. This here was a false breakdown of the pre-market lows, and I was expecting the price to go higher, at least to this. But as I said on Twitter, when you are dealing with something that looks to be some kinds of small range, because at really at 10:50 or 10:30 a.m. you couldn't possibly know that the price is going to be here, at 3 o'clock. So in this time you could think that okay, they will maybe hold the price in this range for some time, and then the price will go up or down, and you will adjust to that movement. So this here was the very small opportunity. It was good only for 25 points, and when the market is in some smallish range, not really, you know, trade with conviction to the either side, then it is a good thing to, you know, to close it on the half of the range, all or some of your trades. So and this, from this to here, it was like 40 points maximum capacity for a trade, and there you could go just, you know, for 25 points, or nothing much. Then price broke pre-market level, made small pullback and continued. Actually, this kind of movement was slow but fluid. What I mean by that really that there wasn't, you know, good pullbacks for you to entry. I mean, this when price goes like you know, 10 or 15 points below some level, then go back, this really isn't you know, some kind of pullback that you can really lean on. And then there was again opportunity for us to go long. I traded that also, but it was really a break-even trade, because as you can see on smaller time frames, this is a 5-minute chart. This was one test of the zone and the test and the cash close. Then price went up a bit, just, you know, like 20 points. And then they test again. Then they test again from the bottom of the zone. And that is really something that you, as a trader who is long from here, you don't really want to see that. You would like to see some, you know, movement with conviction, and you would like to see momentum in your favor, but none of that was seen there. And in this final movement to the upside, then they started to, you know, push down the price for the 4th time. And that was really, you know, a signal for you to protect yourself. If you are here, just protect yourself, put your stop loss break even, because it doesn't really look good. Now, price can sometimes test a level, you know, multiple times, like 5, 6 times. They can be for many hours on some level. But those kind of levels are levels on the very, you know, edges of the range, not in the middle of the range. You don't really want to price to test something that is basically in the middle of the first day, because this from here to here it is, I'm sorry, from here to here it's first day, and now this is basically in the middle of the first day. So you really don't want to price to, you know, test like 10 times here. Price went down, and even this lows from November 12 and 14, this zone here, which was very important before, this zone also was a chance to go long. But when you see this kind of movement, and if you are not really short, because when we observe this movement, now we can say, okay, this short trade from here really, you know, was good for us to hold all the way down. But we really didn't know that in advance. And if you traded this and holding for a bigger gain, that good job to you. So this zone here, and also note that if you are wrong and you're entering somewhere here, you have enough time to protect yourself, to cut your trade, to not allow it to be stopped here, because this is a good movement. If you are long from the bottom of the zone, you also had from here from 300 to like 320 something, 20 plus points of profit. That is, you know, in this kind of movement enough to protect yourself, to not get you know, run over here. And then we come to the, you know, yesterday lows, and again DAX is overdone. DAX is exhausted here, because it traveled really from 430 to, you know, to 1250 and below 200 points. And after 200 points you should expect really an exhaustion. This behavior here, this is a classic DAX behavior of making springs below some good zones that are on the very edge of the, you know, range, and then they will make a bear trap basically here, trapping the traders and you know, running stops that are really close to this first day low. So this is a first day low, and many traders will just wait here or try to go along in this movement with their stop like 3 or 5 points behind this, and all of them are going to be stopped because the price went 20 points below. And if you are one of those traders that got stopped, you should really take another chance and go long again. And now your stop is going to be here, below this low. And from there, the absolute same thing happened on first day. It was a good run to the downside and then a good run to the upside, because increased volatility, it's the environment in which we are trading right now. And that means not only that the ranges is bigger, not only that stops and targets are bigger, but it also means that you need to be able to read market in real time better than before, because in the elevated volatility environments, market will, besides these predetermined zones, they will make an intraday zones. And intraday zones is like this zone here around pre-market low, like here. And when you have some level that already here was falsely broken, then was pierced down, now when the market is going down, this level here becomes a resistance. And really in this here, when the price is going below cash close, it's already 1 p.m. Already in this time you can ask yourself, okay, what do we have so far? Could this here be a high of the day? Because it's already 1 p.m. Market already was trading 4 hours only in a regular trading hour, and with pre-markets for 5 hours. 5 hours of trading. Is this here an a high of the day? Why I'm saying that? Because if you are here with your long, do not expect a complete reversal and the price then will go like here. Use a fib retracement, use this intraday zone to judge where your target could be. And look at this, 0.78, the final fib retracement is right there. But along the way, it's really not a mistake if you are going to bank this trade like here on a halfback. Use a halfback, use a 61.8. Look at where it is, right on the top of the zone, and the final destination, final target is here. And also, this here was a good then short opportunity because of these two reasons. 78 fib retracement of this entire daily move and this intraday zone, targeting zones below this and this. Now you can also then draw fib retracement of this move and observe that then this is a halfback. And I am encouraging you to play with zones and to play with fib retracements and use a fib retracement in real-time trading. It's very useful. Now we are going to the higher time frames. So we already looked this could be a move up, like in this bullish scenario. It could be a move down, we don't really know that yet. But what could be interesting in this environment and in to really observe and to say that there is really no pattern in market that is going to be right 100% of the time. This kind of wedge, you could see that on many charts, that many people on Twitter was posting this chart, waiting and thinking that from here the market will go upside, but none of that happens. This sloping wedge is like a bullish formation, but it failed. It provided nothing bullish from it. Nothing bullish from it happened. So all kind of formation can also fail. And this, let's go to the daily futures chart. On daily futures chart, we can observe this formation of head and shoulders that you also have seen on with many people posting this, and measured move from this. Now it's questionable where do we put the neckline, but let's say it is around 11,900 from here, and then we just clone this, and 100% of that could lead us here, or even to the 10k if we think that that the neckline is lower, then the measured move can go all the way to the 10,000, and that is the bear case of this chart. But there is also a bull case on this same chart, and that is this trend line from weekly chart and weekly 200 moving average. And we really didn't have a decisive close below it yet. We had one close below it, we then had one close slightly above it, and now the price is still here. So this line, this trend dating from September 2011 is still intact. And what can happen now? We could have another candle like this, and then it's going to be, you know, really bearish look, that price can back test later this line and then a huge drop, or this could be just a spring and price will go above, because we don't know that, and every analyst is going to give you both scenarios, bullish and bearish, and he's going to be right, of course, because one of those is going to play out. But we as the traders, and I will say that again, we as the traders also have to be able to, you know, in the back of in the back of our minds, have both scenarios and be prepared for those both scenarios and for every type of trading that you know, market is giving us. So now we are in this environment of elevated volatility, and we have to be, you know, prepared to adjust to that. That is all for me for this video, and on the Monday you will have another updated chart with adjusted zones. I wish you a good weekend and good trading.